What property type should you invest in? Property growth in 2018 was mixed, with London seeing a general fall in demand, with areas such as Manchester and Canterbury seeing surprisingly high growth. Although hugely difficult to forecast for 2019, the best guess contributed by most experts is expect more of the same. This highlights the importance of identifying the fundamentals of supply and demand in the UK property market, particularly focusing on rental growth to deliver capital appreciation. We predict that capital growth will account for just 30% of total returns across UK property till 2023. This is surprisingly with the forecast of a whole 10% lower than the start of 2018. This is also noticeably down on the average 55% having been seen over the past 10 years. Income returns are predicted to rise to 70% of total returns, and this is highly important with rental returns over depreciating value of a property. For the second year running, we are seeing the highest forecast returns coming from urban logistics, this being 10% annual returns until 2024. The reason for this growth being the sector is likely to attract significant investment on the back of some serious rental growth, with predictions that London is to have an undersupply of Grade A office space going forward. A smart investment could be in office development in the capital. Opportunities that are going to surface over the next 12 months. With a repricing in the retail sector emerging, this could be a highly opportunistic time to move in as property investors. With a political desire to increase housing across the UK, a range of types and tenures is predicted to create residential development land, bringing with this opportunity for investment. Smaller sites are predicted to be better value, offering better range than major developers. An ever-tightening squeeze on the buy-to-let mortgage market is also predicted. Cash-rich investors have turned their attention to the markets, especially in the north, in search of higher yields and increased capital growth. The build-to-rent sector is forecasted to increase in demand across the UK, and this is largely cited to be due to the familiarity within the sectors for developers and indeed policymakers, and we expect this to be matched by investors going forward, delivering competitive returns by operating at a larger scale. Businesses that can be diversified will become more valuable in the rural sector, providing the best opportunity for returns due to this diversification to both residential and commercial use. We've highlighted the importance that focusing on the long-term goal when it comes to property investing. Real estate investors need to focus more on the long-term drivers of investment success to become income returns while capital growth treads water, rather than reacting to short-term trends.